Yo, what's up, guys? My weekend was good. Yeah, I was actually the one that was pretty sick. Just last week, I just tired and needed to kind of recharge. So yeah, my kids are fine though. My one kid had like a runny nose, but yeah, he's fine. But appreciate asking. Yo yo yo, types with teeth, Richard. Let's go. It's only been a few days, but it feels like an eternity. Yeah, what's going on, Wayne? Wait, can you guys hear me? What's up with Jeff Sylvester? Margin calls this week. Haircut's coming. Yeah, we'll see. I mean, I'm just getting caught up right now, trying to look into what's going on. I took the whole weekend, so I haven't really done a whole lot of research. But, you know, let's take a look and see if there's anything new. I think the FTD data didn't come out, right? I think last time I checked, I did jump on last night and I didn't see it, so let's take a look. Alright, let's see. Still number one on short squeeze score. Gamma squeeze, we're at 3 right now. That'll probably change on Monday. They did have 100K shares that they are borrowed. Cost to borrow is still the same. Alright. I guess this is for tomorrow, right? Yeah. Interesting. They have it already set up for tomorrow. Nothing changed though, so that's good. Alright. And no FTD data yet. So there's that. I'm not coughing as much, so that's good. We'll see if we can keep it that way. Any new wrinkles on ATER? I'll be honest, not really. I don't until we get the FTD data and see what the options change kind of look like next week. I think there was about 1 million shares in the money right now. So, I mean, let's catch up. All right, so let's see. Notice you reached out for some assistance on Super Snog, similar as with Jamie. Yeah, Shannon. I didn't. I'm gonna write a couple of the like. I don't know if they'll respond to me, but I'm gonna write some of the top guys. I mean, I had some people that wrote me, and I kind of explained to them what I was seeing, and none of them, well, all of them basically were like, "That's really interesting," and they said they were gonna look into it themselves. Nobody wrote me back though over the weekend, so maybe they haven't had time to really kind of crunch things like I was hoping. But my hope is though I can reach out to like some of the the ones who really understand how the sausage is made and see if they are willing to talk to me about what I've found, because that would be interesting, because I think it's multiple different stocks, not just Aterian, and it's something that I think very much backs what super stock is, which is shorts never fully covered the positions. They just kind of hid in the options chains and then rolled them into what appears to be these, equity swaps. And they're, I'm not going too deep into it right now just because I'm still looking into a lot of different things. But Aterian, Aterian's basically still mostly out there, but I think there's some stuff that got rolled over, and we'll have to see. But I do know that if you just kind of compare a couple of the indicators and a couple of the things, they seem to line up with a lot of the other things that I'm seeing, and that would just add a couple more stocks to that basket. So basically, what I found is whatever retail seems to gain interest in and seems to, hold on to, even if they don't want you to hold on to, that tends to become what these meme stocks are. It's basically like companies that you're not supposed to hold on to long, but people have held on to long. So, and there's a whole lot of them, but basically the ones that we're not supposed to buy and hold are starting to act up. And, let's see, $1 million question. Was last week to lull trap more premium? The volume was so low and it seemed controlled. Yeah, I mean, so we had obviously low volume, right? And then we're kind of just, chilling here. And you're going to basically see that if you kind of wedge it out, and we're going to have a break. And there's just too much. They owe a lot of options. Like, there was a good amount of in-the-money options that are going to come due. And they won't have to buy them necessarily Monday morning, but, like, each week that's going by, it seems like more and more of the options are getting, like, staying in the money. I keep telling people, I'm like, to me, like, $3, $3.50, up to $4, that's what I consider pretty safe on this stock right now. Anything above that, you're kind of chasing. But, that's just my personal style of investing. And, I'm supposed to say none of this is financial advice and, for entertainment purposes only. So, there, I said it now. Okay. But yeah, you're right. I mean, it was low volume and they basically just pinned it right there at 5, which was max pain. So, let's see. I had some CBD butterscotch candies. Listen to your voices relaxing the shit out of me. What's up, Trey? Good evening, Anon. What's up, Random? I know you wrote me. I hadn't had a chance to look at it, but I just figured I'd start the stream and I'll get to a bunch of people that wrote me over the weekend. All right, let's see. Hey, yo. That's not chump change. Interesting how the market mentors. Yeah, I mean, it's a good amount of shares. I mean, you figure, 1 million shares on a 26 million free float. That's, that's at least something. Collateral haircut's coming. Yeah, I'm not into the hype thing. I'm now that you mentioned it, this haircut. We'll see. I mean, if all that lines up, then you should see a run on all the, they call them meme stocks because they're trying to discredit them. But it's anything that retail basically got interested in and held. That's what they consider meme stocks. So it's all the stocks you're not supposed to buy. So, hold on. I turned off the baby monitor. My son was starting to stir. Hopefully my wife will take care of that, or I'll be running upstairs in a second. Let's see. Yeah, what happened to the FTD report? So David, basically it came out at the end of the month, but it was a weekend, so because it's government, they're probably closed. So we should get that probably on Monday. And what's up, Hustle? Let's see. Please tell us how the squeeze steps over time, so retail knows how to hold. Please tell us how squeezes step over time. Yeah, I mean, it all. If you look, anything that moves up, it moves up in waves. It's not always a pure this is when they actually have to cover, but these things all kind of go up in series. And this is probably not the best one to look at because this is, let me see if I can turn on regular candlesticks instead of, let's see. Here. So you'll notice, you'll go up, you'll have down days. You're never going to go straight up. This one squeezed a lot faster. But, whenever you're moving up, it's never a pure, like straight line up. Like you're gonna go up in waves, and so like that's what you got to get used to. Is like you'll go up a couple, and then it'll even out for a while, and then you go up a couple. These are basically bull flags. And that's how they tend to, go in these, steps, as they call them, or waves. So they're never going to go cover everything all at once. And you're going to see down days. Like, I mean, if you bought in here and then you saw it even out here and you saw some down days here and you sold out, then you would have missed all this. And then same thing if you had kind of watched it go down this day and you're like, oh, broke through the VWAP and this may be over, and you had these kind of doji, like candles, then you'd miss out on this run. And so like, and same thing right here. Before they actually went up to the highest peak up here, you have down days, like a series of down days, like 1, 2, 3. You had one green day, 1, 2, and then you had this gap up and go. So it goes very, very, like, it always goes in waves. It's never a pure, straight line up. And so that what you see now for us is you see us run up, we came back down, and now we're consolidating, and then we'll probably take another step up into this range at some point. Is it going to be sometime in here-ish, but I could see us, taking another step up, testing this again, maybe consolidating here before moving up again. It's, yeah, like if you're expecting green days every single day, then no stock is for you, because that's not how things work. And, if you look, they're trying to push this down. Like that's their goal. But you can see right here, they are, we're looking for another crossover upwards. This could be very shallow and then cross back over really quickly. So, but what they're, the bulls want is they want that golden cross coming up. So once that happens, that's a hugely bullish indicator, and you'll see a lot more technical traders enter the trade. Let's see. Don Data Papito. What people need to do is go crazy on deep out of the money calls. I would say near the money. I wouldn't say just, number one, that's, I can't tell people to buy or sell anything, because that would be financial advice. So people can do whatever they want, But for me, I'm just more conservative like that. I'd rather hold something that's 350 when it's 5 than something that's 750 and never makes it there. So that's just my personal style. But yeah, you have to have both when you have a gamma squeeze. You need to have stuff that's above you, but usually those are cheap. Like those are, like 16 cents, for, call option, and, or $16. Like, it depends on how high up you go, but like anything that's near the money, that will be more important than the deep out of the money. Because, if you buy like a 25, that's probably not going to hit in the next week or two. Maybe it will, who knows? But like, that's not what I'd be stacking on personally. What's up, DM? What's up, Gatorade? I don't understand how the money options work exactly. I heard it's the best way to play this. It's not necessarily the best way to play it. It's just, for example, a lot of retail's orders are not going through. Like if you check, for example, let's just pull this over here. So over the last 30 days, right here, right? Over the last 30 days, almost, let's round it up. Let's say 58%. So almost 60% of all the daily volume is going off exchange. That means that you're only dealing with maybe 40% buying pressure, even though it should probably be higher. Because most of these trades, I would venture, are retail trades. And they're getting pushed off exchange, so they're not actually able to like hit there. And if you look at like the overall, so like this is like 30% down here, right? So the off exchange numbers, if you notice, they were pretty low, but look where they've gone. We're up here almost 70%. So almost 70% of the volume over the last couple days has been basically going off exchange. which means that they are not allowing buying pressure from retail to actually hit the market. So, because of that, these market makers have to remain delta neutral, or they're trying to, even though we've started seeing them slip from that a little bit, and they are not fully hedging how they probably should. Obviously, they know that they can use short exempts, and if they needed to, they could have kept it in line. So that's what they're trying to do, is just kind of keep it where they want. Thanks, my voice is sounding a little better. But yeah, so people are buying what are called in the money options, and what that does is it makes the market maker start to hedge. And so, once again, this isn't financial advice. It's just you've heard that that's the best way to play it. At least when you buy a deep in the money option. So if you, for example, went in this week and you bought, I don't know, like a $3.50 or a $4 call for that, this week or for next week or the 20th or whatever date you want to do that for, those market makers are going to start having to hedge those call options that are in the money. And what that does is it adds buying pressure. So that's the only reason why. It's not because, options are the only way to play it. It's just, in this case, because so many retail are not able to get their orders, through the market. What ends up happening then is these in the money options are at least making the market maker buy something. So, but yeah, thanks for calling out. My voice is a little bit better. I'm not going to get a haircut. My hair is past my shoulders. That's what Random said. I need a hair transplant. All right, so the the $10 strike for the 520 calls for Aterian has been gaining open interest and volume. Yeah, that's true, and you'll see a good amount of that. So let's see. I've got my watch on, and this watch used to last me like all day, and ever since I get like emails and Reddit, all these things, my watch lasts like, half the day now, and I have to charge it because it keeps notifying me something on Reddit happened. And I'm like, all right. Oh, thanks, Shameful. Appreciate it. Expired in the money calls become shares when. So if, for example, you let your shares go in the money on Friday and you just left them, many of your brokerages, and this is what I told people, I'm like, you have to check with your own brokerage, because I don't know, every brokerage is different. But my particular brokerage, if you allow those things to go in the money on Friday, as long as you have the cash for them, they will actually transfer them over the weekend, and then they become due, actually like locating real shares on by Tuesday. So, do you think we can squeeze before the 20th, Devin? Yeah, I mean, it's possible. I mean, that would be probably the most likely scenario, just because the options chains are getting absolutely filled up. And at this point, like, I think someone said like 40% of like the entire float's locked up right now in the options. So like, I would only anticipate that getting bigger this week and the next week. So until it basically explodes. All right. What's up, Gators? What's up, Market Ninja? All right. We are breaking out of a falling wedge pattern. Devin is saying we're breaking out of a falling wedge pattern, bullish trend. Yeah, I mean, see it there. Biden's executive order is good for us. Flex time. So I think it actually started under Trump, if I remember correctly, and Biden extended it. And this is not anything to do with politics. I actually, if you know, you know the Discord, you know that I don't like talking politics. I believe in just, if something's stocks, it should be stocks. And so, but in this particular case, because it was an executive order, I believe they basically trying to keep like money out of like Chinese stocks that had stuff to do with the military. I have to pull up the article, but basically the concept, I think, is that all these big companies like BlackRock and, like Vanguard and all these different, like hedge funds all had like tons of like collateral that they were like using, and they are not able to use it. So it basically, all this quote unquote, stuff that they're supposed to be, you know, I'm trying to think how like the best describe it. So basically imagine like someone has these things and they said they're, this is super valuable, super valuable. And then all of a sudden someone comes by and is like, yeah, that's not valuable at all. In fact, you can't even use that valuation. So you can't, and then all of the person's like, well, what am I supposed to do with all this stuff? It's like, well, that's not our problem. Well, all of a sudden if that collateral becomes like worthless, then all of a sudden you have a problem with your liquidity and your, margins, because like if they were using all that Chinese stock and bonds and all these things as collateral, then all of a sudden when it's not considered, collateral, then you now have to close positions or do whatever you need to basically get yourself right again, which means that potentially if they were using that for, covering up, these equity swaps, what you'll end up with is a huge problem down the line. If they are, if they are short, for example, like GameStop and AMC and all these, short things that they've been basically kicking the can down the road on, could that actually be, what starts MOAS for like all these, short stocks? It's possible, but we'll see. Are you talking about the golden cross on the daily? Yes. Let's see. Not financial price. Yeah, it's all good. Jotting this down. So the 520 options, what selling put value would you suggest? I mean, you have to kind of weigh out if you were selling a put, which I want to make sure everyone realizes is bullish. So if you sell a put, you're basically promising to buy if the stock falls below a certain price. So like if you did, for example, like a 450 or a 5, you would get probably a decent premium. But you are guaranteeing that like, if the stock drops to 3, you're still buying at 450 or 5. I can't suggest anything, but like I did sell a couple 450s, and I sold actually some 350s the other week. When we dropped down here, I actually sold some 350s, and obviously they were profitable, so I didn't get assigned, but I did keep that premium. So in this case, I might consider like a 450 for this week and see if how much I can collect off those for the premium. But once again, like you shouldn't trade options unless you understand what you're doing. And if you have questions, you should definitely ask questions and make sure you're informed before you make any of these things. But selling a put basically just means that like I promise that if the stock falls below this, I will go ahead and buy the stock for this price. And so when you do that, they give you a premium. The market makers actually give you a premium, and if the stock goes up, then you get to keep the premium, and if the stock goes down, then you've got the premium, but you still have to buy the shares. So you have to make it worthwhile for yourself. But it kind of makes this like interesting choice, which is, for example, if this week, if lots of people sold like 450 puts, it basically means that if the stock falls below 450, then the market maker would have to buy a ton of shares to actually give to people, because if they're getting assigned those, then they have to come up with those shares. So it makes almost like a wall in a sense, if you think about it that way. I don't know if that's the best way to describe it, but like it kind of makes a line in the sand where the market maker has to choose. So if like, 10,000 people all sold 450 puts, if they dropped it below 450, then they'd have to come up with all those shares. So it's an interesting thought. People would ask me about that, and that's kind of what I described to them. So we'll see. All right, so don't dark pools have to hit the market eventually? No, they get washed out, Mark. So what ends up happening is their shares get due within T+3. And so those shares at some point within the next 3 days have to be bought, or they become an FTD. So, but once again, we don't have any of the FTD data yet. And I would imagine when you have this range right here, we're going to be, the FTDs are going to start building around here. I think what we've established was around this point right here is when the FTDs kind of went into effect on the Aterian. And then by the time this part is, we're going to start seeing them building. But until we get into the May 15th one, which is, I guess, here, this is when we really find out how bad things got during this stretch right here. So are they just eating FTDs? Are they just trying to make sure that retail sells? It's hard to tell. So I've seen a lot of screenshots that our brokers are paying 37% to lend people shares. Would that be a problem? I mean, it's not a problem to me. I'm not short on this, so I'm good with it. Yeah, but brokers are paying. Yeah, so I mean, some people are allowing their brokers to sell or to lend out their shares. I've also heard that brokers are just lending out shares no matter what, whether you want it or not. It just depends on your account. Because when they get in these bad situations, they sometimes will bend rules. So, but yeah, I don't think it's a problem for us. I mean, it's typical of them and the market that they don't want to actually have to, they don't want it to go up and squeeze. They want it to be here where they can lend out, shares, make money, do all these things, but they don't want it to, they don't want a GameStop again, which, or AMC or any of these stocks that squeeze. They don't like that because it basically shows that there was fuckery and that, things went sideways. And it basically showed that they sold more shares than actually existed, which is, how this all works. So as long as people are gaining interest and seeing what's going on here, this stuff isn't normal. You guys saw, I wrote that DD on Friday and I just left it for the whole weekend. I think it's up to 1.2 or what was it, 1.12 billion shares have been traded on the stock since they ran out of, shares back on the 8th right here. So it's now been 50, 55 days or something like that since Aterian went to 100% utilization, and since then we've traded 1.12 billion shares or something like that, something crazy, on a 26 million free float. It just doesn't make sense. Those kind of numbers are not how things are supposed to work. It says my mic is cutting out. Do you guys hear me still, or do I need to push that in? Let me know if you can hear me. Will we hear from the CEO during the earnings call? Yeah, with earnings calls, they typically have the CEO, the investor relation guy, and we might hear from, a CTO or something, or the new I think they call him CCO or something like that. We'll find out, but the CEO usually at least talks for a little bit. Well, the CEO mentioned shorting on the conference call. If somebody asked him, he did answer that they were under investigation, or they were still investigating it, and it would take time during the last earnings call. So it's on the 9th, I think, and it's at 5 p.m. or I think it's market close or 5 p.m. or something like that. I'll be on it. I mean, I always listen in on them, so. Yeah, he's spoken in the past. The lawyers are going to tell him to shut up. That's the honest truth. Is he's not supposed to talk about this stuff. The investigation's been going on since October of last year. So, and SEC's been on this since October of last year. So of course it's going to take forever. So yeah, Spooner, I know you hope it doesn't take too long, but it's already taken too long. So. In the last 40 minutes of trading on Friday, $5 call options in the money went from 9,900 to 13.5K. This is bullish for Monday. it would be bullish for Monday or Tuesday because they technically don't have to deliver them until Tuesday. So we could have them try to really shake out retail to tomorrow, and then they could essentially think if they can shake out a bunch, they would just cover on Tuesday. Is it true that they can't lend out your shares if you have a sell order at a certain price? No, I'll be honest with you, they're still lending out your shares. Yeah, it's a nice thought, but most of the brokerages, like, if you put in a sell order, unless it's like near the bid ask, it's not even hidden. So they'll lend out your shares anyway. And honestly, I've even heard that even in cash accounts that are not supposed to be like cash only accounts, I've heard that sometimes they lend out those shares too. It's like some like weird clause inside your, like, if you look through the terms of like service for most of these brokerages, they literally have like a clause in there that says they can do whatever they want with your shares because technically they own the shares. Unless you actually DRS your shares into your own name, you don't own these shares. Your brokerage owns these shares, and that's how the system works. So that's why if you notice like GameStop apes, what they do is they end up, they all DRS their shares. I've DRS'd my shares for them because like at some point they're going to show that they own the entire float. And GameStop actually even like nicely put it on their earnings that like X amount of people have, DRS'd their shares into computer shares. They're transfer agents. So, all right, let's see. Keep going down the stuff. All right. Pulling up over here real quick. I just want to see if there's anything new that's came through. Okay. I am going to do one thing. I'm going to link something real quick and just see if we got a couple more people. But excuse me. How's everyone's weekend? Hope everyone had a good weekend. I had a good weekend. I was hanging out with my family. All right, let's see. I still hear you. Okay, so Mike's not cutting out for them. Maybe it was just I was talking away from it. Let's see. So if they didn't hedge the $5, why do you think they would rather eat it this week than let it go to $5.50 or $6? So that was on Friday. So basically what happened on Friday was, let me see if I can pull up an old options. I think I saved one from... Hold on, let me see if I can open up something. Alright, let's see if I can get it over here. Alright, where did I save all these? Excuse me. Let me grab some water real quick. Hold on. Okay, I'm back, and let's do this real quick. I have this mug down here that I poured some scotch in. I'll have a little bit to coat the throat. Okay, that's probably enough. But yeah, I did have it was like a wine tasting, but they also had a bunch of like different spirits there too. So I did try a couple Japanese whiskeys, and they had a bunch of rye whiskeys and So those are pretty good. But let's go back here and let me figure out where I left off. Oh yeah, there we go. That coats the throat. All right. Do I still sound far away? Okay, we're good there. All right, so I'm trying to find where I saved all this stuff, and I thought it was under pictures. I don't know where I've been saving all this stuff. My documents. Really gotta get used to. Oh, here we go. I saved them in a weird place. All right, let's pull this up real quick. All right, so Game On had asked, so they didn't hedge the $5. They didn't hedge them into Thursday. I think they started having to hedge them into Friday, which is why we saw some like price movement upwards. They weren't going to let it run to 550, but they did, I think, have to start hedging some of these. And my guess is some people closed out because the day was choppy. We went up in the morning, and then after that, they were basically just bleeding out theta. And that's why, if you noticed at the end of the day, like if I go to, let me just pull this up real quick so I can show you guys. Let's go to like a 5-minute. You notice we moved up in the morning. That was them having to hedge, right? But then they just pushed it right back down. And then we just sat basically pinned around here until the end of the day. They pushed it right down to like, a little below 5. And then the end of the day, they just pushed it slightly over 5 to like, 513. So really, you didn't swing a whole lot besides this first day part of the day, and then the second part, and then after that, it was low volume just the rest of the day until the very end, where they had to probably hedge a little bit more. But for the most part, like you're not seeing a huge ton of. I wouldn't be shocked if you look kind of like long term on this, right? So here's the last 3 days. We basically have been going like. Yeah, we hit a low of like the 475, but since then we've been kind of just chopping around this area right here. Like if you draw a line across here, we've just been basically running sideways. Yeah, we went down at one point, we went up, but like, we're basically just chopping around right around the $5 mark. And that's what max pain was. So, I mean, this was a low volume day, low volume day, low volume day. If you go back some, this was a higher volume day. Not a whole lot, but like it was higher. So they basically just pinned it to max pain, and that's where we finished. And so I could see them trying to push it down slightly again, but we might have a thing when they just have to run in the morning and then kind of go back. So, but yeah, so back to the options. So what I was saying was this basically right here. And hopefully I can see. All right, is that clear for you guys? All right. So what I'm basically seeing though is here. Let me zoom out a little bit. What I think they did was they knew that they were going to basically finish around this area. So they were trying not to, though. If they had started hedging on Thursday, what would have happened was they would have pushed up too high and then had started having to hedge this huge like 1.6 million. It's probably not that high. There was probably some, obviously, like, these are not all bullish. There's going to be some bearish ones in there, too. But, retail tends to use calls more than anything else. So it'd be probably safe to assume that probably about 70 to 80% of these were probably retail, like, longs, basically, or, like, institutional longs. So what you can't do is you can't get this too high up, because if you get this too high up, then you start having to hedge these. So I think on Thursday they just chose not to, and that way when they took it off in the morning and then pushed it back down with some in the money stuff, and then an extra, this is not, yeah, this wasn't, this was the day before OPEX. So I think all my stuff is at work. Yeah, my stuff's at work for how the day finished. But obviously we finished right here, which means that there was a good amount of stuff that finished in the money between this whole range. And so if all these people are getting shares over this weekend, not all of them will, but if a good amount of them get shares this weekend, we should see at least some buying pressure in the next day or two. That's what I tell you. But yeah, they have to either hedge them or they're going in naked. If they go in naked, then that's dangerous because that would allow them to basically have to buy any price to just satisfy those, or they become FTDs. And what could be happening is, if you noticed, if I go back to the daily, I just want to show you guys this. All right, so you always get your FTD data on the 15th and then at the end of the month. So what you will see is this whole thing's kicked off right at the beginning of the month, right? It was like the 4th was when we got that first day of huge volume, right? So the FTDs wouldn't start piling up until this would be literally the start of them, right? Well, here's the thing. So here, this right here, the 14th was the last part of that. This whole period right here will not come out until May 15th, which is like right here. Right? So it might not even come out to the 16th. So we won't even know what this big mess is right here until down here on the 16th. So what they may be doing is eating some of these FTDs to just say they're not going to see this for another, half a month. So this is our time to try to really shake them out. And that's what maybe they're doing, is they're eating these FTDs. This is just speculation, but could they be eating these FTDs and just trying to push the stock down to get it under control? And then, by the time the 15th rolls around, we'll really see how bad it got. And then the next part is, which would be like another secondary spike. If we were up here then around the 15th, we won't know how bad this part is until basically the end of May, which is going to be over here. So some people say that, they think this will go between end of May and June. Once again, the 20th is a huge options day. So that could be it. They could just be, consolidating, pushing up and, there's a whole lot of things that can happen, but I'm just pointing out that they may be doing this for a reason. They may be eating FTDs in this area because they know we're not going to get this data until the 5th or the 16th. So, just throwing that out there. I've noticed institutional share amounts changing on Ortex. All right, I've been noticing institutional share amounts changing on Ortex and Fintel data. Is that accurate or estimated? Until we get the 13Fs, it should be, that's when you officially get some actual updates. But at the same time, I think some longs sold in this area, to be honest with you. I think some longs sold, especially in this area. And I don't know if they were convinced by the shorts to do it or if they just wanted out. And either way, it doesn't matter. They can bail, and that's totally fine because there's enough retail traders who want to buy these shares that it's not going anywhere. And they only own 14 million of these shares. So these institutional owners don't own that much. So it would be different if all institutional owners were dumping out and they owned 80% of the stock. But that's not how this works. Retail actually owns way more than any institution. So as long as retail, likes the stock and holds it, it doesn't matter what the institutions do, because once they're out, and then they can't lend out their shares anymore. They can't do all these things. So, yeah, but I mean, my guess would be there has been probably some selling pressure from some long institution, because if you notice, the short interest wasn't that much, but we still had downward pressure on some of those days. So. Spooner said, I thought the investigation started recently, not like last year. There was a post on Reddit saying an executive order. Yeah, I did see that, Gina. In fact, I think one of the people in the Discord wrote it. Yeah, I'll be honest. Like, it ties in with the super snock stuff, and it ties in with kind of this meme basket idea that these guys basically use Chinese, like, bonds and like all these different instruments to basically prop up their U.S. positions. And so if this thing goes sideways, we're going to see all these stocks that are used for, these nefarious, basically like short hedge funds that have been shorting these things for, years. Could they start being margin called? We'll see. I mean, I'm not putting my, all my eggs in that basket. I mean, I think it's a very interesting thing, and I think we'll see. But it just seems like they always find a way of weaseling out of anything, or at least kicking the can a little bit further each time. So, I mean, at this point right now, I'm focusing on the things that I can control. But it was definitely, I think that there's something there. I'm curious to see what ends up happening with that, because I did see the correlation that he made between, or they made. I don't know if it was a male or female, but I did see the correlation that every time that one of these orders expired, then we would see a spike on all these meme stocks. So, yeah. I hope. I mean, let's keep it in the back of our heads, but for right now, I'm just staying focused on things I can control, and executive orders, and Chinese collateral is not one of them. So, we really on our own, but I'm confident we succeed. How do you DRS your shares? So they have a smaller. So GameStop use Computer Share, and Computer Share is a larger institution that's considered like a transfer agent. So what they do is they basically take your shares and they put them in your own name. The difference between when you buy through your broker and DRSing your shares is, if you DRS your shares, they are your shares. They cannot be lent out. They can't, like, Computer Share doesn't lend them out. They just, they sit there in your name. That is actually how my grandfather invested. He did not allow anything that was not in his own name. And yeah, it takes a little bit longer to sell, and I remember it was a pain in the butt. And I actually, I had shares of Computer Share way before it was cool, because that's how my grandfather used to invest. He used to put everything in our own names, even when we were minors. And then when we turned 18, we gained custody of those accounts. But yeah, smart guy. He was ahead of his time, apparently, because it's funny, because I used to transfer my stuff out of there, and now I'm finding myself transferring it back. But with Aterian, they are dealing with a company called like Philadelphia Transfer. I think, was it Philadelphia Transfer, something like that? Let's see, Philadelphia Stock Transfer. That's it. And they're a stockbroker in Delaware, but they allow you to DRS your shares directly into them, and it's fairly simple. You go through your brokerage. You have to submit some papers, and I actually called the Philadelphia Stock Transfer and said, "Hey, listen, I want to learn how to do this." I wrote a little thing up on the Ultimate DD for Aterian, and I'll write it up again if you guys want. But basically, I called them, and you can ask them the same questions I did, which is like, how long does it take to transfer over? How long does it take to transfer back? Because the difference between them and Computer Share is Computer Share would allow you to sell your shares through Computer Share. These guys are smaller, so they do not allow that. So if you planned on DRSing your shares, then what you end up having to do is, if you want to sell something, you have to transfer them back into a brokerage. So just wanted to throw that out. But if enough people had done that, it would be interesting, because liquidity is already very low. And so, if tons of people were DRSing their shares, which is kind of like the ultimate poison pill that retail could do, then all of a sudden the DTCC does not have a ton of, shares to lend out to people to do all these things, because all of them would be taken off the market. And our float right now is, very small. And so that would be something that if the stock price started going down, if retail just said, all right, we're not planning on selling these and DRS their shares, then you would see huge issues going forward, because all these people that have shares lent out through retail would have to then actually buy those shares back, because to transfer them out, they need to make sure they have real legitimate shares, and they have to be transferred over to those agents. So I'm not saying this is not financial advice for anyone. I'm just saying, like, that's how it works. If these brokers don't actually have your shares and they were transferred out to be DRS'd, they would actually have to buy shares if they don't have them already. So just throwing that out there. No, you can't have an FTD on that. You can't eat an FTD. You literally have to go to the market, buy those shares, and then transfer them over if retail was actually, transferring them over to a DRS. Like, that's not something where you can be like, oh, no, I have cash equivalent. Like, no. Like, if you're literally having to put shares in people's names, you have to buy them legitimate shares. And right now, that's super hard to find. So that is retail's ultimate poison pill. If they say, we're not going to let this happen, if retail started DRSing their shares, that would get super interesting in theory. I call Fidelity, and they guarantee that cash accounts cannot be borrowed. Take it with a grain of salt, though. Yeah, I've heard that many times before, but then I've also heard instances where people caught them lending out shares that were in cash accounts. So, let's see. Did anyone else notice that when you route your order through IEX by the market ask price, it's immediately canceled? How come? With a limit price, it goes through IEX. Yeah. So a lot of your brokerages, if it doesn't execute within a certain amount of time, it kicks it back to Smart, and Smart will transfer it off of the IEX. So I don't know. Some of these brokerages that say they route through IEX, I'm starting to wonder if they actually do, or that's, like, if it doesn't go through a certain point, then they switch it over to a Smart one, which basically means it's going to go through, an off exchange. So just throwing that out there. I think IBKR is fine. They don't have payment for order flow. Yeah, IBKR, you basically, I believe, have to give them permission to lend out your shares, but they will pay you for them, unlike a lot of the other brokerages. It might have to do with IEX speed bump. I've heard that 90% of orders are canceled at market. Limits always execute. Yeah, that's what I was going to say. That's more likely. Yeah, slower execution. Yeah, so, I mean, it's not as popular, and obviously these other systems are they're designed through payment for order flow, which means that they'll let anything go through. They're fast, but they'll wash them out off exchange. So it is what it is. What risk is open for us that the shares can go down? Yeah, so I mean, so here's your thing. You have a pretty asymmetrical bet. So here's your 52-week low right here. Like, we're still on this thing right here. So 210 is your 52-week low. Right now, the stock price is $5.13. But let's just round it up and say it was $5.20. You have a $3 downside, because obviously we hit that, we bounced up from there. And that was the 52-week low. So your downside's about $3, but your upside is a lot more, considering most of these target prices are like between $7 and $15 a share. So, for $3 downside, I'm willing to take some risk as far as like buying a stock and then holding onto it long term, because right now, I think things are fundamentally improving. Like, it may take them, a couple more quarters. Like, as far as like, if you didn't have any short interest, if this was just a stock that I was looking at, they're fine right now. They're not going out of business. They're not getting delisted. There's nothing to like. these shorts got greedy in this section right here, and what ended up happening is we do have short interest, and because we had short interest, they ended up getting trapped because somebody noticed and then trapped them in here. And since then, they've been basically doing this, like trying to wiggle out of it, and someone's allowing them obviously not to wiggle out of it. So there was like a guiding hand. I think it's probably like some smart money that basically trapped them here and made sure the pressure gets on here. They've taken some profits here, and then they're going to just do it again, probably, is my guess. And they're just going to keep this kind of going in a general uptrend until these shorts basically either just cover or, all hell breaks loose. So we'll see. All right, so do you think we have pressure to blast up in tomorrow? Yeah, I mean, there's going to be some buying pressure just because of the amount of options that ended up in the money. So I would imagine there's some buying pressure tomorrow. It may be caught with a huge bunch of selling pressure. It also depends on the overall market. There's all sorts of stuff going on. I mean, we finished up on a really bloody day in the market. So, yeah, it was only 1.5%, but like we still finished green in a sea of red. So that means that we're doing okay. I'm selling my red box pre-market for more ATER. I wanted to hit 420 shares to this week. There you go. Yeah, I was gonna say. I mean, anyone that's in that play, I called that what I saw, which is I went through some dilution numbers, and it looks like for example, there is a Redbox does have warrants right now at 11, but they also have, and they're only like at 5 right now, I think. But what I noticed, they got something in there, and I think, let me see if I can pull it up for you guys. But they have some sort of, like these new, I'm pulling it up right now. It has to do with the, I think, debt. Like if they have it like a debt, what is it? Exercisable only if certain debt conditions are not met. And those got registered or like issued on April 16th, which was right here-ish, right? So like that's not that many days ago, and it looks like there's about 11.4 million shares from additional dilution, and they already had 16.8 from the SPAC warrants, which are right here. So, yeah. So just throwing it out there, like if you want to play that, that's fine. Do whatever you want, but just know that there is some dilution risk on that, just kind of like SST. Like at some point something can dump down and then completely change how things go on that stock. So, but yeah, that's what I expected. They try to push down mid-May, end of May, mid-June, the steps, not financial advice. Yeah, I mean, they're going to try to. We'll see what ends up happening. I'm of the mind that at this point right now, if you think about every single day, like Aterian stock, on Reddit, that's growing every single day. Recently, it seems like the word's slowly spreading. People are starting to actually read the DD, and I mean, I think we gained something like 5,000 members over the last like month, maybe more. Let me see if I can pull up mod tools. I don't think it matters if I show this stuff, but just I wanted to show you guys basically where the stuff is going. Like over the last, let's do the month. Yeah, so we've gained like 5,300 people just in the last month. And of the last 7 days, we've gained another like close to 1,200. Actually, it's 1,100. Let me pull it out. Yeah. So we're starting to, these numbers are starting to go up. the last 7 days, there's been over like almost 70,000 unique IP addresses looking at this stuff, and almost, I mean, that's a good amount. So we're getting some eyeballs on this stock, and we'll see. Obviously, over the weekend it gets, a little bit quieter, but during the week they typically go on. Yeah, I saw that China was working on not letting them become worthless. Yeah, that's why I'm not standing on all this stuff. Do you think they use AI to short? They use an algorithm, yeah. So those algos turn on and they basically follow. So that's what I was saying. Like, you have like headwinds and tailwinds on top of like the algo that's actually on the stock to try to make it go to certain prices. Andy asked, did your grandfather drink scotch and eat Skittles? Nah, he didn't have much of a sweet tooth, but he definitely drank scotch every night. I think that's what he drank. That was his drink of choice. Because he did social hours, so his social hours would be at like, I think 5 o'clock every night or 6 o'clock every night. That was his social hour. So he'd get some cheeses and drinks out, and they had that every single night. Him and my grandma, they'd have their social hour, as they called it. And then, they had dinner after that. But I do remember they always did like a social hour, and he drank scotch. Let's see. Did you see that DD on the executive order? Yes, I did see that. And I did talk about it earlier in the stream. I saw the retail trader sell right around the 4.5 right before the closing with a 94% gain. Saw a retail trader sell right around okay. Yeah, I mean, retail will sell. I mean, people are buying and selling the stock all the time. Like, some people buy and they hold long term, and some people are day trading this, and some people are swing trading this, and some people. So you're going to see retail going in and out of this play, and it is what it is. Like, it's their prerogative, it's their money, they can spend it how they want. Like, personally, I'm looking at this long term because I think this is going to take another step up, and I think we're going to see another run. But some people want to swing it, they're going to swing it. So, do you think CEO will get aggressive with short selling abuse, similar to what Overstock did? Short sellers sued the Overstock for manipulation. Yeah, so if anyone's not familiar with this, Overstock was the stock that kind of like really fought back against shorts. The CEO issued a digital dividend, which basically, I remember when they did that because the stock went kind of nuts. Because they basically had to cover, and they had to cover nakeds that they had, and they were nakeds because the SEC, I believe, if I remember correctly on this, the SEC had allowed them to go 666 days straight on Reg Show for Overstock. Like, I want you to think about that. There's like 2 years straight of like being on Reg Show. Like, that's insane. Any thoughts on TD Ameritrade? I have TD Ameritrade. I have TD, I have Webull, I have Fidelity, I have a bunch of different brokerages. So, do we still need massive volume to start this, or are we getting to the point where it's a ticking time bomb? It's a ticking time bomb right now. I mean, like, it's already, like, we've traded 1 billion shares when everything was locked up back here. Like, this is just a matter of time at this point. Like, we're going up at some point. It just does, to me, they're fighting it. It will take longer, but, at some point it's going up. So, we'll see. FTDs are piling up. Yeah. Like, this is all, yeah. If we take another step up and then even more stuff's in the money, that just adds additional pressure. So, we will definitely get to see down in this range right here, especially how bad things got and are getting. So, Mullen, SST, and Redbox makes me wonder, could we have earned if we swing them? I mean, I made money on Mullen. I made money on SST. I'm not touching Redbox at this point just because I think, if you want to play those, you're more than welcome to. Every one of them had dilution. Mullen had the cashless warrants dilution. SST had an S1 filing for pipe warrants that came out. And then Redbox has these mystery, they don't even have a strike price on the warrants. So I'm not touching that. Like, it literally says 0 on the warrant price, which means that at this point, until I see something there, I'm assuming that they can issue those at any point. So they could dump out on retail at any point until I see an actual filing that gives me a strike price that's higher. So, curious of your thoughts of DZ's inverse head observations when ATER runs similar to UVXY and inverses the daily market trend. I mean, like, we're not the only one that's doing that, but yeah, it's definitely interesting. I don't know if they just set it up on a similar algo that goes with or against, but there seems to be weird times where, like, ATER followed AMC. There was other times where it followed more closely with GME. This is a highly manipulated stock, and so all right, the branded saint. Lou versus Wall Street started to talk about ATER. He's that AMC guy, right? Yeah, he's like the motivational AMC guy. I don't know a whole lot about him. I saw somebody that was kind of ripping on him. That's the only exposure I have to Lou versus Wall Street. But yeah, I was gonna say, pretty good numbers. I don't know. That must be like his catchphrase or something. I don't know. But yeah, I saw, like, some guy literally was like doing a segment on him, and he was like, "This guy, does not know how to read a balance sheet." I don't know. Maybe he does. I have no idea who the Lou guy is, but this other guy was like mocking him, and I said that's the only thing I've seen of Lou. But let's see. But honestly, if he's got numbers and he's talking about Aterian, then I'm good with it. Like, good on Lou then. But, if he's going against Wall Street, that's, I just don't like how all this shakes out, because all this is bullshit. Like, you shouldn't have this happening. Like, you shouldn't be able to trade this much on something that's locked up. Like, and they know it's locked up, we know it's locked up, and everyone's pretending like this is normal, but, like, this shit is not normal. Like, on a 26 million free float, you should not be trading 1.2 billion shares or whatever it is. Like, those are stupid numbers, and they should not be happening. It means that it's just being, like, manipulated actively, and they're hoping that we just go away. Hey guys, great to tune in, and looking forward for this week. Some interesting things should happen. Yeah, Anton, it should be going on. Pre-market tomorrow will be interesting. I do want to see these FTD numbers. I don't think they're going to be huge right away. I think they will be much bigger on the 15th of May when we get to see those ones. But I do want to see at least numbers starting to spike. Like, I'm not expecting it to be like 1 million shares or anything like that, but I'm expecting it to start growing from where it was. So, yeah, algo trading is definitely a real thing. Like, AI algo trading is very, very real. You should sell your scotch in Discord. No, I'd just tell you guys how to make it yourselves, and you can have it. All you have to do is buy these mini barrels, and that way there's more, like, surface area hitting them, and then it's shaling. It's what I like, and I just drank those. Let's see. At which price would you sell most at? I mean, I'm not planning on selling anything until the shorts start covering. So, till that happens, then I'm just looking at the price going up. I mean, I think Aterian at one point last year was like people thought it was going to be $15 to $20 like as like the normal like price of the stock. Now we've had some dilution since then, so that's brought the numbers down slightly. But like I think this stock should be priced probably in the like 8 to 12 range. That would be my like assessment, just a fair value of the stock, because most stocks aren't trading well below. Like, yeah, we're in a risk off or risk on environment right now, but we'll see. I mean, like, I'm expecting the stock to be much more up in this range here-ish sooner than later. So, and then at that point, it's all about the shorts. What are they going to do? Are they going to cover? Are they going to drag it out? I'll be here. Tom, very smart guy. He finds every scrap of info he can find. Thanks for the video. This is gonna blow up this month probably. I don't know about that. I try to gather information and kind of go from there, and we'll see. What if we can get overstocked? Yeah, I mean, so here's overstock. They issued a digital dividend, and that's one way of doing it, but that came along with huge amounts of litigation, and when you get sued, it costs the company money. Well, Aterian doesn't have a ton of cash, so there's a huge difference between like an overstock and an Aterian. They probably don't want to fight lawsuits out for years, so that's probably also why they shut up after the SEC probably went to them and was like, or even their own lawyers, and said, you got to stop tweeting about this naked short stuff. Like, you're accusing people and you have to have concrete proof, and then the SEC should be involved. And that's my guess on why they probably got like the muzzle on talking about it. But yeah, that's fine. I'll talk about it for them. So I'd love to hear your thoughts on the upcoming market recession in regards to the timeline. So right now, if you've noticed, like, we had a hugely bloody day here and here and here, and we really didn't finish that badly. Like, I think we finished, like 2 pennies down on this day, and this day we finished up when everything else was bleeding off. Like, this is one of the worst days in recent history, and we were up 1.58%. Like, so I don't think, honestly, like, we're against a headwind right now. Like, there's definitely downward pressure for the entire market, but I'll tell you right now, it doesn't seem to matter that much. Like, it's like a slight annoyance, but like, you can tell right through here, like, we held pretty solidly for a market that's just dumping. So there you go. Yeah, Chris, 2 straight years on Reg Show. Yeah, I mean, I'm telling you, the market is what it is, and it's not a perfect, and like, you would think, like, okay, well, we have rules, right? Well, the rules aren't enforced right now, and there's just a whole bunch of like problems with our market. So the best thing we can do is continue pushing out evidence when they do things wrong, and we'll just keep, fighting our fight, and hopefully we can start electing people who actually give a shit about all of this. The biggest problem is, though, the biggest donors for all these politicians are Wall Street, because they have tons of money and they want to keep their influence. So it is what it is until people start getting mad and start understanding what's going on here. Like I said, I'm not political. I'm actually independent. I hate both sides pretty equally because I think both of them are corrupt. I just call it as I see it as far as this stuff goes. Like, we need to clean house on this system, because this T plus system that we have right now allows stuff like this to happen. Like, we shouldn't be trading this much. If there was instant settlements with blockchain, or some sort of like instantaneous settlement, or even like a T+1, you don't get this shit. And you need to start getting rid of these, like, kick the can down the road, like, like equity swaps, and like, just, they have so many loopholes right now. And that's part of the problem, is you can literally like change how things go by just kicking the can down the road and then making it so bad that like you crash the entire world's economy, every time these guys get greedy and mess up. And that's essentially what will probably happen is at some point these guys are going to get caught, and then the whole entire system and then Congress will get in front of them and go, well, how could this happen? And they'll go, well, I don't know. I mean, it's just, all the banks are going to be before them. And, well, we were lending out these things. And, like the way these swaps work, like, is dirty. And their banks are making tons of money on these swaps. Like, if you actually read the article on, what's the guy's name, the Asian guy? The one from, is it Argolos Capital or whatever? But he was like banned from like the Hong Kong exchange, and then he came to the U.S. because ours is even less restrictions. Like, if you can believe that, right? So, let me see if you guys know his name. I'm really far behind, but let's see. Wang. Like, that dude just straight up, like, went to a bunch of banks and said, let me use your collateral. And then they basically, like, use these swaps to I mean, the story is crazy because what he was doing was he was completely over-leveraging himself, and he was doing it. And these bankers didn't care because they were making huge fees. Like, somebody said that one of them was, like, made, like, $216 million in, like, these fees. So they don't care what this guy's doing. To them, he's just like a money pit, just throwing in money, and but he was completely over leveraged. And so when he blew up, those particular stocks just imploded. All right. By what market mechanism will reported FTDs drive up the price? Technically none, because Reg Show doesn't actually apparently do anything except for let you know that the stock's being probably actively manipulated. But eventually the FTDs, after, they can be closed by the SEC. Like, it can happen. And what typically ends up happening is once those get they just start stacking up to the point where they're like a problem, the SEC will come in and or actually, sometimes not even the SEC. Sometimes the lenders were just being like, "Listen, like, this has gotten out of hand. We're gonna manually close you out because you're becoming a problem you're becoming like a market risk essentially at a certain point." So that's what I think what we will eventually see, unless like a GME MOAS starts off a chain reaction for all shorted stocks, and then we'll just fly too with everybody else. But we'll see how that ends up going out. But yeah, FTDs by themselves just show you how bad things are getting, and they technically should be, closed out. But we'll see. I'm not super confident considering last time we went like 30 days with nothing happened, and they're supposed to be closed by 13 days. So. This feels like AMC did around last time this year. Odd stock movements, tight price ranging, then boom. Yeah, then it ran to like 70. RC needs to buy a squatted potty for the memes. Yeah, that'd be fun. Put it in front of his toilet, right? What if the hedge fund that sold off were followed to next week's holdings to kick them down while they're down? I mean, I would go long at this point. If I was a rival hedge fund, I would go long. Somebody said Lou is a controversial AMC guy. Okay, yeah, I don't know much about him, but does anyone have access to S3 data for the short interest? I do not. I can tell you that, Keith. I did see somebody pull up some stuff that, they put out on the Discord. We'll double check and ask people in there. Yeah. So Fidelity sent out emails offering retail 30 to 37% APR to borrow your shares of Aterian. over the weekend. Yeah, I mean, that tells you they're in trouble because, like, they don't normally do that. Normally, they just, they'll take your shares. But in some of these cash accounts, they probably don't have access to them. So, yeah, no, it's about no target. It's just about them covering. Yeah, and that's the way I'm playing this. Is like, I like the company long, so when it goes up, it is what it is. That's what I'm anticipating. I think they're going to be up here again in this, like this range, or this range here-ish. Somewhere in this range, sometime around here, it's going to go up there. That's just where I see it going. All right. If retail keeps buying Aterian, wouldn't that make the squeeze bigger? Yeah, because essentially all they're doing is they're just delaying this. Like, Aterian should be up here just based off like buying pressure, but they're suppressing it. So what ends up happening is they keep this suppressed, and eventually they may push it down, hit a spring, and then it just flies up. That's kind of how these things work. But yeah, the more retail is buying, the bigger this gets. That's how SPRT ended up flying from like $10 to like $60. Like, they had been buying, and then they locked up most of the shares all in the money here because it was a small float, and then all that pressure had built up that eventually they ended up just gapping up, hitting 60 that day, and then pushing it back down. And they probably, to be honest with you, didn't close out all of them. They just kicked the can down the road. But, let's go back into Aterian. All right. Let's see. It says somebody wrote, we have 111 people. Smash the like. Okay. Yeah, Wang, the leverage guy. Bill Wang's story is insane. Down 20 billion. Yeah, I mean, all those banks ended up having to like eat tons, and I think they wrote a lot of them off with insurance. But yeah, notice Wang's bail was $5 million. Something's going fishy. He could have given out lots of names and info. Yeah, I mean, so the problem is also like he was running a small family business, and so with those small family practices, they don't have to disclose the same way a hedge fund would. So all these like little funds that run, they can get away with a lot of shit. Like if you ever watch Billions, you'll notice that Axelrod's people sometimes will go off and start their own things, but then Axe will basically like cut them in on deals. And they're not supposed to talk to each other, but they obviously still talk to each other. And that's kind of how the world works as far as like these guys will go off, start their own funds, like Melvin, smaller, Melvin was private or was at least out there in the public, but these small company, like small office ones, they get very little oversight because, they still have a lot of money that flow through them, but they get away with so much because they get, we're just a small family office that's controlling, our, own clients' assets. But those guys get like a huge amount of like leeway, and they don't report like anything. So I would imagine a lot of the short interest is probably stored up in those small family offices that are all linked to these bigger offices. Bigger funds. But once again, that's speculation. I don't know that for a fact, so I'm not going to accuse anyone of that. But they could be a very interesting thing. What happened to risk management? It's lost that art, just load up on leverage. Yeah, I mean, that's kind of what they do now. I think your catchphrase would be, well, see, yeah, after the squeeze made to a certain perspective. Well, we'll see, yeah. Probably my filler words. Let's see. All right, is the ATER float locked up? It just needs volume. Yeah, I mean, every stock needs volume, but yeah, it does. We'll get some buying pressure this week, I'm sure. even if it's not as high as it was in the past. There's also, I just want everyone to realize this. You're not going to get the same volume that you did back here. Like, when you had these 145 days and what was that, like 160 million days, whatever it was, you have way less shares now. Like, there are way less shares floating around. So I just want to point that out. All right, so yeah, they can keep, so here's Mitchell. So here's the way it works, right? So as you're buying in, right, so say this huge day right here, right? There was a good amount of retail that bought in this day. Well, if you count the T+3, 1, 2, 3, they had to buy some of these retail shares here, which obviously sent the stock spiking. Did some retail buy here, sure. 1, 2, 3, you're seeing some retail buying pressure here also. So that's how these things work. So they can route them off exchange, which won't affect the immediate price, but eventually they do have to buy these things. They'll push it down during the day and then try to cover some of these. So, but that's if they're even bothering to deal with the FTDs, which is another question. So. Yeah, I was reading about small family offices. Why had you just open up all those since they can hide more money? They already do. They send their not best, but they send a lot of their own people, people that worked with them that wanted to start up their own thing, and they basically I won't say they seed them, but they make sure that they still have communications, or at least they know what's going on. And so a lot of these, you're not supposed to be working together. These small family offices are often, around the same stocks, just to say that, as I'm basically trying to figure out how to say things without accusing anybody of doing anything wrong, because apparently there was already, a good amount of talk about me needing possibly be a lawyer going forward, because we'll see how all this ends up shaking out. But I have to be careful what I say, so I'm going to try to do that, even though these are for entertainment purposes only. Apparently, I could get gagged. They find out who I am, or they really are trying. They'll put a gag order on me, which means that I can't say anything. So if one day all of a sudden I disappear, it probably got a gag order put against me. So you guys know what to do. But just throwing that out there. Yeah, you're entertained. This is all for entertainment purposes. I am not a financial advisor, and this is not financial advice. It's some dude drinking scotch and just talking about stocks. All right. Yep. Yeah, I'm all about. Let's see. I just read the last couple. I think the OTC market, if there's an FTD, they have to pay out 135% of the asset it causes an FTD. Yeah, I mean, this whole thing. Yeah, I'm getting tired though. So, Michael's going to become the new Anon. We'll just no, I'm Anon. Yeah, it'll be like that scene in Mask of Zorro. No, I am Zorro. I am Zorro. Everyone's Anon. So. My censored comment wants to know what's stopping them from continuing kicking the can. Superstock and AMC folks keep saying Mo must assume, but it's been over a year, nothing's happened. What makes ATER different? Not a shill. But okay, so let me just explain this. So when AMC and GameStop both actually, squoze, let's go to GameStop real quick. You notice what the price was. Now, all these other things are once the thing had already squeezed or squozen, but when they really built up pressure, and let's just go to a 30-minute. I just need to zoom out though. I need to go back a good amount. I just want to show you though when the actual stuff went insane, right? When it went up to like that 500 whatever pre-market. Probably should have done the hour. All right. But I want to show you the beginning, and that's where the most important part is, right here. When you were down here at these low stock prices, and I think here, like at $4, right? $4. This is when they started gaining a whole bunch of like problems. It's hard when you can stack up a ton of shares and retail can buy and hold them. It causes problems later on because look at this. So you're buying shares at $3-4 a share. You're looking at, a very affordable thing that most retail can buy. It's like how many retailers have $500 to invest? A lot of them, like $5 a share. You can buy 100 shares, even as a poor retailer. So when you actually start thinking about like how this all started, when GameStop was down here at this level, they were buying lots of these shares pretty cheaply. And so what ends up happening is now these guys are trying to fight it. They're trying to push it down, shake retail out. But every time they push these stocks down, retail's buying more of it. And it over time, it becomes kind of like a catapult. Like it's just pulling back, because the share prices are still reasonable down at these levels. Even at 20, like that's still like a somewhat reasonable level. The difference though between GameStop and AMC was AMC had a huge amount of float and they diluted twice. So their float got even bigger. GameStop still had a relatively low float because they did a share buyback in this range. So the reason why I think GameStop really kind of exploded even more was because their shares were not as like, they had less shares in their float. We have a low float. We have also a low stock price where retail can afford these shares. And that's the difference. Trying to squeeze something that's already sitting there in the hundreds is super hard because retail can't afford that. That's why the stock split on GameStop is actually a smart idea. It's because retail can actually buy again. If retail was, if this stock was $20 again, retail can actually buy that again. Whereas Aterian, though, low float, if you think about AMC's got what, like 500, it's like a $500 million share float or shares outstanding, right? GameStop now has something like what? I think it's 60 million, something like that. Maybe slightly higher. Let me look it up real quick. Just I don't want to give you bad information, but it's still got a relatively low float. But the price now that makes it so retail can't afford it. But here with Aterian, you are sitting here, and people have been buying in this range and all the way up in here. These are still very affordable prices, and so as retail starts hearing more about this, it gets super dangerous for them because, it's one thing when 25,000 retailers are buying this, but once 100,000 retailers are buying this, and they can all afford, a couple hundred shares each, well, you've already locked up the float multiple times then. So that's why this is going to be different than, for example, GameStop or AMC. It's because basically this stock right now is affordable for most retail traders, and options are cheap on it, whereas like options are super high on GameStop and AMC. So there's a couple differences, but the main thing that you need to know is because of the price of the stock and the low float, that's why this can move better than probably GameStop or AMC at this point, just because the other ones are so public that this one could possibly move and most people wouldn't even hear about it. So, but as it gets bigger and people find out about this, it's gonna get even worse. And that band, rubber band, catapult, whatever you want to use, it's gonna sling back the other way, and it's gonna sling hard. So, but if you wanted to know why this one can move where the other ones are taking forever, it's because number one, the other one's very the other ones are very public, and they don't want the world to see what happened there. And the other part of this is basically like just based purely off of the float size and the stock price. This thing's got potential because it's still cheap enough for retail to buy. And institutions too. Institutions can buy huge amounts at this point. Let's see. You think about how long it took Burry's theory. It took, Burry I think was like in it for like 18 months or something like that, or maybe even longer. Yeah, I mean it can take a while. What happened to the FTD data? It's not out yet. It'll be out probably tomorrow. So, obviously, with the markets closed over the weekend, they were not updated. So, yeah, I mean, it's gonna take a while, and like the more you guys talk about the stock and get the word out there, the more it spreads, and people will start looking, joining, trying to find out what's going on with this, and we've gained 5,000 people on Aterian stock in the last 28 days. So it is growing, and it's but I'm getting tired. I'm gonna head off, but I'll see you guys pre-market. Yeah, I mean it was 18 months or 2 years. It might have been. He started. I think he had his position for like 18 months or something like that. But yeah, I mean I can only imagine the stress. It's like this should be happening. It's not, and they kept kicking the can down the road, and obviously they went to the rating agencies like Moody's, and they were like, "What the fuck is going on with this?" And the rating agencies were like, "Well, these guys are the ones that pay us, so like we can't give them bad ratings." And yeah, I mean the whole thing is just it is what it is. But yeah, thanks guys. I'll be around this week, and so once we get those numbers. Good night, sweet prince. Thanks, yes. Yeah. Let's, no matter what happens this week, just remember we've done our due diligence. We understand how this all works. I'm not worried. Like at this point, it's just a matter of when. It's not a if Aterian moves up. It's when Aterian moves up. So, but yeah, I was gonna say great seeing you guys. Hope everyone had a great weekend, and I'll be around pre-market, and I'll be on the Discord. I'll send a link for that. That's what I usually end with. So if anyone wants to join the Discord, you're more than welcome to. Linking it right now. Let's see. All right, here we go. Oops. See if that link works. So if anyone's not part of the Discord, it's free. You can go in there and talk to people. It's fun. And then, obviously, we were attempting to try to get me to become a real streamer where I can hang out with you guys. I do need to figure out, obviously, I noticed I lost, I think, like 8 Patreon members, so I need to find a better way of actually providing some value for that. But I'm actually losing Patreon subscribers versus gaining them. But I will continue posting them. But I'm hoping once Aterian starts moving up again, maybe some people will be able to throw a little bit in there, and we'll get that number up, and eventually we'll get me to stream every day, and this is what I would do full time, and just talk about stocks and find new plays and different stocks going on, right DD, all that stuff. So yeah. All right, thanks for hanging out with me, guys. Have a great evening, and I'll see you guys all later on. All right.